so maybe a little too much sun right now. We have an exciting panel here for you today, really to delve into fraud, what businesses and banks should be thinking about in the new macro environment. And I have 4 fantastic panelists here with me today. Fraud, regardless of size or sector, is a priority for businesses. And the term fraud encapsulates a variety of risks at different points of the customer experience or journey. So examples include account opening, account takeover, transaction level fraud, returns disputes, so on. So we're going to get a really great perspective from the people building and preventing fraudsters. So to level set, it'd be really helpful for each of you to tell us what you do and where you really focus in terms of fraud in the customer journey. Laura, why don't we start with you?
Yep. So I'm a co-founder and president of Alloy. Alloy is an identity decisioning platform for the financial services industry. So we work with both banks and fintech companies, and our sort of area of focus, secret sauce, is in the orchestration of all of the data services and then things that you need to do to prevent fraud. We also focus on regulatory and compliance risk. So as an orchestration layer, we bring together a ton of different data sources, including working with some of the folks here. And we help manage all of those data sources, A/B test them, analytics, and sort of step up methods to make sure that your users really are who they say they are. And we manage that throughout the client lifecycle.
Michael?
So I'm Michael Reiplatt. I'm CEO and co-founder of Forder. And Forder is an e-commerce fraud prevention and e-commerce enablement platform. When we started the company, we thought fraud's the problem, but then we quickly realized that the fear of fraud is a bigger problem, about 7 to 1 if you measure economic impact. Last year, we monitored over $300 billion worth of e-commerce transactions. It's very odd that we're talking about fraud and I can't keep eye contact because of the sun. As I mentioned, monitored $300 billion worth of transactions for all kind of global retailers, QSRs, grocery companies, travel companies, every vertical you can think of, done by 1.3 billion people. So we monitor mainly transaction fraud and transaction behavior, now expanding into account fraud, return fraud, and so on. Everything around a digital interaction between a consumer and a merchant of the broadest kind.
Hi, everyone. I'm Soups. I'm the CEO and co-founder of a company called Sardine. We take risk out of high-risk payments. So we primarily work with high-risk industries such as crypto, neobanking, as in fintech, high-risk payment processors such as cannabis, gift cards, et cetera. So wherever there is risk, we aim to either reduce the risk or increase conversions. Today, we work with about 200 plus fintech and crypto companies. We do 2 things. One, we have full cycle fraud prevention in these industries. So we take care of fraud at the time of account opening. Then we take care of fraud when you're funding the account. And finally, whenever you're moving money in and out, we do AML transaction monitoring as well as fraud prevention. The second thing we do is we put our money where our mouth is. And we, in terms of high-risk industries, we act as a payment processor as well. So today, you can go on to crypto wallets like MetaMask, Brave, hardware wallets like Ledger, and you can buy crypto using Sardine. And we underwrite the fraud risk, we take on the fraud liability in those cases as well. Yeah.
Pablo Abreu, I'm the CPO, CTO for Secure. And essentially what we've built at Secure is an end-to-end platform with proprietary algorithms from being able to do day 0 account opening, compliance and regulatory checks, from CIP to watch list, to having highly precise account opening fraud solutions based all at around machine learning for third-party synthetics, as well very soon at around first-party. We also have built our very own document verification solution, and recently also launched anything that has to do with verifying that this bank account belongs to that particular identity. And so we're completely expanding, heavy product-based company, and so super excited to be here. And all of our solutions, just to re-emphasize, can be utilized across a single API, which makes it super easy for all of our clients to consume all of our solutions. Today, we serve over 1,300 clients from tier 1 financial institutions all the way to probably the majority or all of the fintechs. So we've been very heads down at around what we can do to prevent fraud across.
I think we're in a period of the past 5 years where we've seen massive tailwinds for the industry when we think about digital acceleration, the pandemic's effect on e-commerce and just movement of data. A lot of people are remote. Things aren't as secure as they could be, and advances in AI and kind of risk decisioning in terms of building new engines. Alloy put out a really great report in terms of kind of this state of fraud. From your perspective as an orchestration layer, what are kind of the 2 to 3 key things that have really driven a lot of this from your seat?
Yeah, I mean, I think unsurprisingly, fraud is just huge. Our report, the fraud benchmark report, found that over 2/3 of financial institutions have lost over $500,000. And if you think about just sort of the breadth of institutions we're talking about, including neobanks, community banks, it's just a massive number. I think from an orchestration perspective, and actually, I think, Michael, you put this well, like the fear of fraud is almost worse in certain cases than fraud itself. So fraud itself is big, bad, ugly. The fear of fraud is one of the really nasty side effects here, that it just means, like, as a result, people are shutting down businesses. And if that's the answer to really bad fraud, then we're in a pretty, bad place. And so I think the industry has to kind of come together and do things differently. COVID obviously accelerated a lot of this. And one of the silver linings of COVID, especially in financial services, was that we accelerated the digitization of everything, right? We got calls daily from PPP lenders going, I got to figure out how to digitize my whole process. Now, there was a lot of great stuff about that. My mom finally started using Venmo. But the negative was that it opened up a ton of new kind of channels for fraud. And if you were a 100-year-old bank who was finally going to do your digital transformation project, you were also going to potentially open yourself up to fraud without having any of the people, the resources, the tools to actually mitigate it.
We are going to hit on new channels because I think fraud stories are pretty entertaining to the crowd. But before we move to that, any comments from any of you guys on the tailwind side that weren't mentioned?
Well, I would say different industries and different geographies have different tail or headwinds, right? I remember March 2020, when I was here stating that we will keep going on conferences, and then a week later it was shelter in place. 25% of our business at that time was travel, and it went to 0% of our business, probably within a week. And then maybe 2 weeks later, all of our grocery and food delivery businesses did 1,000% increase, right, in e-commerce. And then you saw kind of a rebalancing. When you look at it from a global economy perspective, right, Europe's not doing too well, so it's actually retracting. And then Asia, especially some of the South Asian markets, are growing really fast. So different industries are digitizing at a different pace, and they have a different digital penetration perspective. Right, there are definitely people like your mom, or, well, I think my mom still doesn't use Venmo, so there's growth there. But different types of people respond to different types of products. What was definitely surprising to me when we started the company, I would not have thought that Burger King will be a big customer for us, and they are. And QSRs is a great industry, just because the digital experiences have changed. So as the pace of transformation across the world and the industries are changing, we're seeing different strength of tailwinds, and in some cases even headwinds.
It reminds me of the McDonald Monopoly fraud case, if you remember that, the lottery. Soups, were you going to say something?
Yeah, so is the question around digitization?
Yeah.
So with digitization, I think the thing I'm most concerned about is actually scams, right? So as people are moving money faster, we have the saying that faster payments leads to faster fraud. So you see that with Zelle very commonly. There are lots of folks who are being scammed because they think that they are going to send money via Zelle to someone and get the goods, but they never get the goods. Or they get scammed into believing they're actually going to do a refund scam, right? Like, they could get a call from a bank saying, hey, I'm Bank of Omaha, let's say, and we owe you $1,000, But first, you have to prove that you are who you say you are. So why didn't you send me $1,000 first before I give you 1,000? And then the scammer, of course, takes the money back and runs away, right? So I feel like as the industry gets more digitized, that's what we have to be really, really concerned about, scams, right?
And Pablo, just to add to, feel free to address it, but we'd love to hear from your CTO seat. You've been at Socure nearly since the beginning and building out the platform. Just tell us how kind of the tech stack has evolved also in your response.
Yeah, and so from our perspective, for the past 10 years, we've seen that Chill's overall fraud has actually gotten more difficult and more difficult. The same way that we've been innovative with machine learning, with more data, and we've even gotten smarter as to what we're able to do to actually mitigate fraud. What I'm seeing is that the combination of data bridges, the combination of deepfakes, the combination of bots, and what fraudsters are able to do, combined with the community that they have created and sharing information, it has made them plenty of more sophisticated. Like, I can tell you for a fact that even us, some of us share the same account opening industry, but we're not sharing as much information as the fraudsters are. And so when you have the advancements in the technologies combined with more data they have available in the community that they've created, it becomes extremely difficult for us to actually stop them and stay ahead of the fraudster. I can tell you that one of the latest innovations we've done internally has yet to be released to our clients is at around how do we detect all of the fraud attacks before they actually become fraud attacks. And I can tell you that what blows my mind is seeing how within the intraday, how the patterns of fraud are actually changing as they are adapting and as they're figuring out what are the mitigation that some of our clients have in place as one-time password, whether it's via email, whether it's via phone. The idea that they're able to quickly adjust and figure out where they're not going through the systems is clearly evident across our over 1,300 clients here at Socure.
That makes a lot of sense. As we see, just like I think we all get spam texts, random calls saying, your social security number has been exposed. Soups, you always put out good content. Any kind of fraud war stories that you'd care to share in terms of just in a snippet or two?
Yeah, there's so many, right? So I think the one that we keep coming up and again around is just scams, right? So I give the example of Zelle scams. We also oftentimes find that the scams that are happening have actually nothing to do with fintech and crypto, literally nothing. If you really think about it, the reason why we get scammed is because when you get a text message from your bank, you have no way of saying that it was actually the bank who sent it to you, right? Similarly, if you get a phone call from your bank, you have no way of verifying that it's actually your bank calling you, right? So nowadays, I don't pick up any phone calls. I don't reply to any text messages, right? Because the fundamental problem is that in the internet, like when the internet protocols were created, like to send text messages or voice messages, right? There's no sender verification happening. So the internet was built on shaky foundations, and now we have moved on to having like faster payment methods. And of course, we are all gonna get scammed, right? So for example, like you asked about war stories. So one common one that we see nowadays is, people would get emails or text messages, for example, saying that, hey, I'm from Amazon, we owe you a refund because of some shipment didn't arrive to you. Then they convince you to click a link. You click the link, except it's not going to Amazon. It may go to a lookalike site with Amazon, except the A has 2 dots underneath, right? So with an umlaut. You go there, you enter your credentials, they take it, they replay it on the real Amazon, right? And then they are into your Amazon account, and they're gonna do whatever they can. Likewise, it could have been a crypto exchange, it could have been a fintech wallet, it could have been a bank. So there's, more and more of these phishing attacks that we're seeing, and people are, giving away credentials and losing access to all the wealth. There's more I can share, but I'm curious to hear others as well. Yeah.
I think all of us on stage are way more paranoid because of everything we know. I remember when I first moved to the US, I got a Capital One card, right, because that's the first one you usually get. And then I get a mail from Credit One, and the logos look similar. So I was sure that Credit One is just phishing and not a real bank, which apparently they are. But I totally agree with Soup. I don't respond to text messages. If there's a link in the text, I will not touch it. If you call me and ask me for my details, I will not give it to you. I think it creates a substantially more paranoid world once you understand how it all works. But as I was saying earlier, I think the bigger issues are on the lack of trust, right? If I want to buy something and I have to verify a text message, which I will not respond to, we have an issue. I was actually have a story from today. I was trying to buy something in a luxury store, I will not name them to not embarrass them, for my wife as a gift. I cannot do that because I never shopped with them, so they cannot let me buy online or by phone. I have to walk into a store and buy it over there. They cannot pull it from another store, and the item I want is not in that particular store. So now I'm done.
And an unhappy wife,
couch, yeah.
That's not very good. Well, we are in LA, so if we package enough of these stories, I think we'll find someone from that.
They don't have it here. I tried.
To package it. So if we move forward and thinking about fraud and the life cycle, onboarding and identity is obviously critical, and then there's a transaction and funding element, and then post-purchase. So when you think about safely onboarding, Laura, you obviously have a lot of data partners, and there are a variety of customers of different scale here at the summit. Kind of, what would you like to kind of inform them on in terms of how to safely onboard and think about the onboarding stage?
Yeah, I think the onboarding part is critical, but we really think of onboarding as being not as day one or day zero exercise. It's often a 90 to 120 day exercise. A lot of what we hear gets called payments fraud or other fraud is really, in our view, identity fraud. And there were probably signals at onboarding that you should have been paying attention to, or maybe you did pay attention to, but it wasn't overwhelming evidence that this person was bad, and you wanted to let them through and sort of see how they, see what would happen. And so our view is that you need to use the data onboarding. You need to use a lot of data at onboarding. So you need to collect all the data points from the folks here. You need to use as much data as possible. A person's identity is not just, what a credit bureau says about them. It's what they've been doing online. It's what your LinkedIn profile looks like. It's what your phone says about you. It's all sorts of things. And so you need to collect it all. And they need to be monitoring transactions and looking at the events that they're doing, how they're logging in, what sorts of, do they take $5,000 out of the ATM every day? Weird behavior, but if you track that, maybe you know that that's okay. It's usually not. And so collect all that and really be able to continuously evaluate them. And that gives you a lot more power to both protect yourself, but also to actually give a really good customer experience, because it's not a binary view of they're good or they're bad, and you don't give yourself only one moment in time, the 3 minutes while someone is onboarding, to actually make that decision. You give yourself a lot more data. So that's the Alloy point of view.
Yeah, so if I may add, the onboarding piece or problem is extremely interesting. Why do I say that? Because if you just don't want to have fraud, you just don't onboard, right? But at Secure, we've been focused around how do we verify 100% of good identity while completely eliminating identity synthetic fraud. And so from our part, is really around understanding the compliance requirements from the clients, and then marrying that with our very precise fraud solutions so that we can find that equilibrium as to, are we going to automatically onboard 90% of all consumers while really just stepping up those 10%, right? And what are the fraud that we're capturing within that 10% so that we can maximize and let or push out as much of the bad out. And so from our particular perspective is really just really working and understanding the tolerance of our clients, and then really designing what should be the end-to-end onboarding from the compliance to the fraud to the step of the document verification, so that they can have the end-to-end workflow needed.
And I think you both hit on the importance of data transparency and kind of sharing. What are the biggest, I guess, blockers you would say to that today? in terms of getting the right amount of data? It could be more regulation in terms of you need better visibility on the end consumer, or something around the ecosystem.
I'll chime
Sure.
in with 1 second. I think there's like a, because you were referencing sort of the way that fraud has evolved and gotten incredibly sophisticated. Like fraud startups are now a thing, right? They've just been fueled by all the cash that they've stolen from us all in the last couple of years. They all work together, and I don't know that we all work together as much as, I mean, I think the industry's starting to coalesce a little bit, but you have to share a lot of outcome data to be able to effectively manage this. And so I actually just think it requires a lot more of a community, the way that the fraud community has done with each other to do this. I also
Take
think,
a note out of fraudsters.
yeah, exactly. I also think the regulatory aspect is probably coming at some point. It's not imminent, but there will be additional scrutiny here because consumers are getting hurt.
I think I may have a very different view because the way the regulation is going, it's almost impossible to share data if you want, especially if you're global. Right, mitigating between GDPR and CCPA, and forgot the acronym in Australia, but you cannot legally keep the data anywhere, especially when you consider there are people that are citizens of more than one country. And because sharing data is a challenge,
Yep.
You have to disclose it a lot of the time, you need to store it in different places. We actually don't participate in that, so from our perspective, all the data that we collect from by analyzing transactions of our customer, it all goes into a central place. We never expose it anywhere, and we never mix it with external third-party data just to make sure that it's clean.
I have a slightly different angle here. So I think so far data privacy and fraud, they've been at odds with each other, right? So when we look at all the payment methods, any guess? If I told you Apple Pay, ACH, cards, where's the fraud highest? Any guesses from anyone in the audience?
Adele?
It's actually Apple Pay. And the reason it's the highest is because Apple has taken a very high road towards privacy. But when they took that stance towards being more privacy aware, they forgot that when they make systems to be too private, fraud systems don't work, right? So for example, you take a card number, the holy grail of fraud prevention is you take the BIN number, which is the first 6 of the card number, and you write velocity rules on it. Suppose I stole like a bunch of Wells Fargo cards. I'm going to cycle all of them through like a fintech, and I'm going to monitor the velocity of how many times that BIN is used. But Apple, because of its stance towards privacy, has basically taken that BIN and mapped it into an arbitrary number, which no one has any clue what it means. And we've lost that edge, right? So my take is that we need to make sure that when other public enterprises, they look at privacy or regulation, right? They need to take care of fraud as well, because they can easily dial it one way and realize that all of a sudden scams and fraud has increased exponentially, right?
I have another theory about why Apple Pay is that when we monitor fraudster communication, right? A lot of the more sophisticated fraud is done by organized crime. Sometimes they have SaaS vendors too, I don't know, right? One organization collects the data, sells it to another one that builds tools that you pay for $10 a month for whatever. Very incredibly efficient economy. I don't know if your LPs let you invest there. But one of the badges of honor you get as a fraudster is actually you load a stolen card into Apple Pay, you walk into an Apple store and you get a phone, and then you recycle it, right? And you can do it forever. Because there is this perception that Apple Pay is very secure. A lot of the time the risk falls onto Apple, so you don't care, and then a lot of bad things happen.
Yeah, basically it's like in security as well, the weakest link in a chain is what breaks it. Fraud also has a very similar theory. Like you want to get to like higher and higher credentials, and Apple Pay is the most trusted credential you can get to, right? Yeah.
I actually do want to go back into the data sharing because it is just fundamental for the account opening and the fraud that actually when we started, or about 8 years ago, when we emphasized that every single of our clients that on board within our system needed to provide feedback data, they were completely all against it. And now I'm seeing a change in where they understand why we're collecting feedback. Now I'm seeing a change. They understand the benefit of it. They understand how their feedback is utilized just across all of our ecosystem and fraud system. And so I actually believe that the next step for us to even be more accurate within our solutions is to get the compliance at around how you monitor or how you monitor models or the whole model governance lifecycle. There is where we need to do a lot more work for us to be able to innovate faster and for us to be able to have a faster, more accurate solutions into decision making than actually just waiting in the back end and having our clients be 2-3 versions behind.
No, I think just to draw a parallel, you all talked about both startups, banks, and large fintechs. I think it was about a year ago, PayPal had an issue they had to disclose around kind of fake accounts. So from your perspective, is there a perception that fintechs are more at risk or susceptible to fraud, or do you think that's a misconception? And Soups, you had experience at Coinbase and Revolut. Maybe start with what you've seen and learned through that.
Yeah, so yes and no. Like, there are some things that fintechs do which is better than banks, but on the other hand, I think there are some cases where they're kind of completely shut out of some ecosystems, right? So today, all the banks, they share data with each other. There are lots of bank-led consortiums. So for example, if I have a stolen Chase account, I could not walk into BofA or Wells Fargo because they share that blacklist data with each other nightly, right? But I could definitely take a stolen Chase account, connect it to a Chime, from there take it to Varo, from there to Digit, and maybe even bring it back to Chase, and no one will break that loop, right? And the reason is that all the bank-led consortiums, they don't really share data with fintechs because they're all money transmitters, right? So we've started an effort to actually get all the fintechs together and start sharing this data with each other so that they can be at equal footing with the banks, right?
Yeah,
you guys are doing something similar, right?
We are doing something very, very, very similar. We're uniquely positioning where we have both the tier ones or financial institutions as well as the fintechs. And the advantage of the fintechs is that they move a lot faster, right? They're able to share more data. They're able to sit down in a room and innovate with you, while the banks, they do take a bit more time to sit down at the table. They have consortiums that they've been using for quite a while for the first-party fraud side, like the EWS, but there's nothing from the fintech side on how they can even tackle first-party fraud. And so that is what we are right now, heads down and innovating with plenty of the large fintechs.
And just to transition here, because we hit on a key point in terms of friction earlier. We don't respond to calls or text messages. There are a lot of companies very focused on growth, and now it's, capital is a little more expensive, so you can't, have cheap capital to grow. So when you see companies on your platform, have that push and pull of fraud and friction, what is your kind of advice to them, and how do you kind of see that generally play out? Laura, maybe start with you.
Yeah, I think there's a little bit of a myth that people want like an instant experience. I think you push a button and open an account. And I think for financial services, there's some sort of curve where completely instant, I think actually freaks a little bit consumers out because they're like, oh my God, you have access to all this information, you know everything about me. But you also don't want a 30-minute experience, or I think what is standard is like going into a bank branch still. And so what we found is that there's something, and we do have the actual data somewhere, but I would say it's somewhere between like 2 and 3 minutes, where that sort of experience below that doesn't really get you much more. I think consumers are pretty happy around there. They want it to be information they have, they want it to be safe, they want to trust you at the end of it. And so that's not just get them through fastest. There's also this, in this idea of kind of graduated onboarding, which we reference, like it's not day one, do everything. It's not binary. It's not either you can go transact $1 million tomorrow or not have an account at all. You might consider giving people a little bit of friction for a little bit of access, medium amount of friction for a medium amount of access, et cetera. And so you can ask people to do things throughout their relationship with you, like what we call step-up methods. So send us your document for a driver's license for verification, or 2-factor your phone, something that adds a little bit of friction, but then adds the trust and lets you transact more at higher amounts, do riskier things as you sort of prove yourself. And plus, you're already in that account, so you're more likely to actually go through it because you rely on your bank account. You sort of need to do it once you're a little bit more captive.
Totally agree with the dynamic kind of risk-based authentication, but I do think that tolerance for friction is very cultural. So if there's a transaction kind of that immediately everything works and it happens to a Northern European, they would probably think that they get defrauded. If you show some friction to an American buying something, they will immediately shut down the window and go to Amazon. So it very depends on the person, and it very depends on their expectation of what used to happen before.
I think also e-commerce and sort of credit cards are different from how people act with bank accounts. I think
Sure.
credit cards here people feel like not as protective of.
It depends. You can steal a lot of stuff from people's credit cards. And I think the current approach generally, and we've seen that with fintechs and we've seen that with banks and large retailers, most of the thinking is very rules-based in terms of how they apply policies, and it's very segregated within the bank. So I live in London, I have a US bank account. If I want to wire money or even initiate an ACH, I have to respond to 3 text messages, which makes no sense because if I can respond to the first, I'll respond to the other 2, but it's run by 3 different teams or departments within this bank, and it creates a horrible experience for me, so I'd rather go and do something with another bank. We need to make sure that people understand that they need to apply, like you were saying, friction to the risk associated to it, but also to the tolerance of that friction to the consumer you're dealing with. So it has to be, I would say, identity managed. The customer is in the center, and you need to understand what works for them, and not the risk is the driver.
Yeah, so what I see is that in order to be successful at recommending how the onboarding or what logics or how the entire end-to-end workflow really needs to work, as a company or as a fraud expert, you actually need to work with 3 primary sectors or buyers within the institutions. You have your executive that cares about conversion. You have your fraud team that cares around how do I slow down fraud, and then you have your compliance officers that really cares around are we being compliant. And I think that bringing them together and being able to really come up with the right strategy, workflows, and logics to be able to design that in where you make everyone as happy as you can is really finding that equilibrium.
And maybe an anecdote on this, I've just recently met with a large, I don't know, let's call them a global Fortune 100, with the fraud team, and we did an analysis of their data, and we showed them we can generate $100 million worth of revenue. The response was, well, this year revenue is less important for us, and we're more focused on lowering our cost, which in that ROI was about 400,000. 100 million, 400,000. That's their decision. Naturally, we went to the CFO and said, do you want 100 million? And they did.
He also said no.
Yeah.
Yeah. We have so many clients, even including buy now, pay later, that we're just in the mindset of fraud and how much can we reduce fraud, while now they have completely switched into my fraud is under control. How can I increase some of that conversion?
I'd also add that not all friction is equal. I think we've seen, like, the industry standard for a long time was what we call KBA questions, like those questions that are like, which of these addresses have you been associated with the past, or what car did you drive in high school, or whatever. And we found that those are positively correlated with fraud, meaning the person committing fraud is more likely to have those answers in front of them because they got your exposed credit bureau report in front of them. Meanwhile, I can barely remember what car I drove in high school. So the type of friction is sometimes a little bit counterintuitive, or we've just it's sort of outdated. And so I think there are types of friction now that are minimal and actually really high quality, meaning you're not asking a ton of the consumer and you're going to get a lot out of them performing whatever you're asking them to perform. And then there are ones that are just kind of garbage or actually sort of working against you, but widely accepted in the industry.
Can I add something? Yeah. So one of the things I wanted to highlight was that, so for example, one of the industries we serve, which is crypto, like today, if you use your card to buy crypto, the conversion rate is like 50%. So that's really terrible. That's like, I'm tossing a coin and I'm saying, okay, Michael is allowed to buy Bitcoin today, but Laura is not, right? which doesn't make any sense. And the reason is that the fraud algorithms at the banks, the issuing banks, they're not fine-grained enough, and they just treat any high-risk category as like fraudulent, and therefore the algorithms are not performant. But on the flip side, right, like if you actually reduce fraud, then you can actually increase conversion rate. So there's really two sides of the same coin. So when we started allowing folks to purchase crypto using Sardine, we started hitting like 85% conversion rate, because what we did is we told our merchant acquirer that turn off all your fraud rules. We are good at fraud. We are just going to take care of it. And then we took care that we'll only send high-quality traffic to the issuing banks so that we are training their models that they don't actually decline our transactions, right? So just a story to highlight like how fraud and friction can play an intertwined role, right? Yeah.
No, I think that's super helpful, and it leads into kind of our last discussion area is, a rising tide seems to lift all boats in this environment. What are you kind of most excited about in the next 5 years that you think will be a game changer for you to stop fraudsters?
So I can start. From our side, we have been heads down with every single of our clients on how do we get them to trust us to share more data. Sharing more data, creating more consortium products, and being able to be more intelligent to be able to understand what those client A, B, and C, what are they labeling versus how consistent and how much value we can add. That is for sure what excites me the most, but that doesn't come from just being a company that solves fraud. It comes from the trust that we've established with tier 1 financial institutions and all of our fintechs in order for them to be able to get to a point of sharing this amount of data with us. And so I'm excited of what we've been able to do from the identity fraud. I think from third-party fraud, I think synthetic fraud is a big deal right now. We're seeing it shows across all of our demand deposit accounts in where there's money mules is a huge problem within demand deposit. I'm also super excited around what we're doing and what we're heads down and what clients are wanting to solve at around first-party fraud. Is the first time that we are actually seeing a big demand as to, God, please help us solve the first-party fraud similarly to what you've done for the identity and synthetic at the account opening. So that actually makes me super excited, and it seems that once you have identity for both third-party and synthetic well established, that money movement as well as first-party becomes the next frontier that we're looking to be able to tackle here at Secure.
So one thing I'm actually super concerned about first is the rise in physical theft of our phones, right? So I'm pretty sure like some of you guys probably read the story of how a Monzo customer, somebody noticed her PIN code over her shoulder at a bar of her phone, and then they stole her backpack which had her phone. And then they got into her phone, they got into all her photo app, found out all the social security document pictures, driver license pictures, reset all her passwords, locked her out of all her other Apple devices, and then of course withdrew cash out of all the other neobanks, including Monzo, that she had, right? So what we are super concerned about is that rise in physical theft, because we all carry a full bank in our pockets. And we are a behavior-first company, so we have actually built models which I was pretty excited to learn from my team that based on how we hold the phone, we can now actually detect to pretty good accuracy that, is it me logging into my Monzo account, or maybe Michael picked it up and is logging in, right? So that is what I'm excited about.
I know how to fake your hand movement.
Yeah.
Yeah, I think if we're in the scary department, and I intended to say something else, but I want to build on this because there's more and more movement towards biometric, and I think that's a terrible idea. Because if you think about it, passwords are bad, and we all forget them, and we sometimes use bad passwords. But if your password's compromised, you can replace it. Mm-hmm. If your fingerprints are compromised, I don't know what you do.
Yeah, you completely shut out.
And there was an artist that she did this for art purposes, nothing to do with crime, out of Brooklyn, I think. She followed people around, collected things they threw away, whether it's a cup or a cigarette or whatever.
Not a crime at all. It's fine.
What?
It's not a crime. She wasn't doing anything.
And she took a picture just for comparison purpose later. She collected the DNA out of it and grew their face. Right? There was a section. There's another session about synthetic biology. The technology here advanced so far, we can actually create this. And then, now, she cannot predict from DNA whether you have a mustache or anything, but for Apple's purposes of unlocking your phone, your face grows the same way, so you actually can use it to. That wasn't her project. Her project was how she can recreate, but then criminals took this and proved that they can open your phone with it.
How did she do that? That's crazy.
I'll send you the thing.
That's ridiculous, wow.
And not repeatable, right? So it's, sorry, I cannot do it for everybody, but if all I need is 100 compromised phones, I follow 200 people, and I'll probably get it. What I was originally wanted to say, because when you were saying, like, what are we excited for, is actually not the technology so much, but more adoption of previous technology that already exists. In payments, oftentimes we talk about Stripe and Adyen and the new feature of Apple Pay or whatever, and we forget that all of it still run on mainframes. There's an IBM machine somewhere, and if whatever we've built is not compliant with what the machine can run, nothing works. But now we see more and more adoption of banks, payment rails, processors, and so on, of more modern technology so that we can actually connect, right? You cannot run AI on a mainframe. But they're building these middle layers to be able to connect. Right? If I look at our business, so last year we processed $300 billion worth of transactions, which is about 2% of e-commerce. So still a huge way to go in terms of connecting and collecting that data. And now we started collaborating with banks because, as you've mentioned, they have no information about a lot of these transactions, and that connectivity is not even 0.1% penetrated. So there's a lot of that. And models actually don't matter, at least in my view. There's enough investors in the audience, so I feel comfortable saying that when we were raising our seed round, a few investors passed on the round because they told us neural networks were a thing of the past and you shouldn't use them. And then about 3 or 4 years ago, investors passed on us because we didn't use deep learning, because everyone's so enamored with whatever the technology you're using that's hot at that time. I don't even know how to use generative AI in fraud prevention, but I'll try if I'll ever need any money. But data is key, and connectivity to that data and be able to use that data for the broader context rather than every silo or every retailer or every bank in itself is what gets me excited.
Laura, I'll let you close us out.
Yeah,
here.
I'll go like low tech here, at least relative to AI. And I think the thing I'm excited about is building software and workflow capabilities that catch a lot of these edge cases. So a lot of what we need to do is sort of cure these gray areas, like, you know, we think maybe you might be a fraudster, and so we're going to ask you to do something, and that requires a person on the other end reviewing your case or asking you to send in, you know, a selfie or something. And so there's a lot of software that has to be built around all of that curing and step up. And then I think a lot of the fraud that we're seeing are things like scams, romance scams, mules, and a lot of social engineering, which is like not particularly technological. It's really like I'm calling them and I'm convincing the person in customer service at my credit card company that it really is me. And it's just sort of human behavior. And so I think there's a lot of stuff we can do to actually combat that has nothing to do with models and is really kind of like boring software, but it needs to be built, and we now, you know, we certainly have the capability to do it. It's just not been a core focus, I think.
Well, I think that brings us at time. A lot of things to be excited about and also petrified of. So excited to learn so much from these great panelists. They'll be around during the summit, so I encourage you all to find them, spend some time. But help me give them a round of applause.